Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis video for Monday, August 15th, 2011 through Friday, August 19th, 2011 is sponsored by Realtik. Alright guys, let's get into the mix. What a wild week last week. What we're going to do first is talk about quickly last week, then project into next week. We're going to go over key technical chart patterns on the charts to give us an idea about exactly what happens in the market and what will happen in the future, and how do we make money off of it. That's the bottom line, right? What are we going to do to make money this coming week? We had a fantastic week last week. I want to just say that first and foremost. If you were in the research center, if you were in the chat room, you blew it out of the water. Why? Because we nailed the exact low here. We knew this was a pivot low because of volume. Volume dictated a flush out or capitulation move there. The reversal was an epic 700-point reversal on the Dow Jones Industrial Average, and that move up solidified a bottom. Even on Wednesday, when the market was down 500 points, the average person on TV, the average analyst on TV and in the media was saying, oh no, get out of the market, get out of the market. We had been saying buy down here on this flush. This was the buy here. Accumulate on Wednesday when you were down 500. Why? Because the pivot low was never taken out. All right, you have to understand a bottoming signals in the market. When you're seeing signals, how do you know what they are? I'm going to go over that right now. First and foremost, you had to know that based on the pivot low right here on the markets on Tuesday, if you go to your daily chart, this was a massive pivot area right here. So see this little gap fill? This was the last major support area until you go all the way down here. So when the market on Tuesday pierced on the daily chart here on the SPY, which mirrors the S&P 500, and reversed, saving itself from closing below this line, that was your pivot low. All right, first of all, because you held the major level. It held. That was important. Secondly, as I just mentioned, the volume here in these candles was 550 million or more on the SPY, which was epic. That was the biggest volume of any candle over the whole entire period going back to this entire fall. All right, so not only are the markets extended to the downside, you know they're due for a bounce, but then you start seeing signals right here. As you're seeing these signals and you're holding key levels on Tuesday, the market reverses. When the market reverses with such a massive move, a 700 reversal point move on the Dow Jones Industrial Average, that means a significant bottom is in place. The only way that bottom is negated with all these signals is if the low is taken out on a closing basis. So if on Wednesday, let's say we had flushed all the way down and closed below this line right here, this 110.25-ish area, on the SPY, then you would say, okay, that bottom is now taken out. As long as that holds, it doesn't matter if the Dow was down 400 points that day, 500 points that day, 600 points that day. As long as you did not close below that line, it mattered not. The bottom was in. And again, people on TV, I couldn't get over it, folks, how intelligent people, whether it was Kramer or Fast Money guys or this or Bloomberg or that, they're all saying, oh no, oh no, oh no, stay out of the market, stay out of the market. You got to have some guts here. You got to have some cojones, I mean, you got to be able to step up because that's how you're going to make money. Now, you have to do it in a smart way, obviously, which means is if you had bought right here, again, like many of our traders did on a pullback, anytime over the course of this day you could have bought on the pullback on Wednesday, you have to know that your stop out would be a close right here. But notice how tiny of a stop out that would be. You would take a small loss. So you know your downside small here, but look at your upside and look at ultimately what you got. And again, it's all about the haves and the have-nots. Who has the guts? Who knows the signals? That's who makes money in this market, folks. It's not a market for the faint of heart. You need the guidance. You need the appropriate signals and be able to read them and get the signals. And again, people in the research center, I tip my cap to you as you guided yourselves off of what I did. I gave you this analysis all week long that the lows were in, and you made money because of it. Again, there's a free trial for anyone out there watching this video who does not know about us in themoneystocks.com. 7-day free trial to the research center, 7-day free trial to the intraday stock chat. In any case, let's take a look here. So that flush late on Wednesday, and by the way, that flush late on Wednesday, don't think that was not done on purpose to take out the weak hands. Think about how many people bought on this move up here. All right, you just see the market running like that, and many people just jumped on board. The flush on Wednesday was to take out those weak hands. All right, remember, the weak hands always lose. The amateurs always lose in the market. It's just the nature of the beast. The institutional black box trading programs, they're built to flush out the weak hand. So again, the key was to recognize, and this is what you have to do in the future. If you didn't do it this last week, then you missed out, but that's okay, because there's still time to learn. This market's not going to get any less volatile. It'll get a little less volatile in the coming week, obviously, in the weeks, but I still think it's going to have a lot of volatility to it, so you need to know these signals. Understand how to know when a bottom is broken on the markets. or on a stock. It's the same thing for a stock. These same things would apply to any stock that you're looking at. And ultimately, you could have bought any time here. You could have bought any time here. We were buying. I picked up AK Steel. I picked up Hewlett Packard. I picked up TLT, which was my partner's alert. It was a beautiful trade. Take a look at TLT, folks. I mean, just look at this chart on a daily basis. I mean, look at, TBT. TBT was the symbol here. TBT on the chart. Buying it right here. See this bottoming tail? And this is another key level. You have a bottoming tail right here on Tuesday, right? Tuesday is this day. This is the daily chart now we're looking at on TBT, which is the ultra short 20-year. And then you have Wednesday, which was that big 500-point down day that followed. But notice on the TBT how the low was not taken out. All right? See that? That means that the bottoming tail is still intact. You could be a buyer at the low on Wednesday, and it still would be a bullish signal. All the amateurs, even a lot of the smart, intelligent people out there didn't know that or didn't pretend to know that. I couldn't get it at all, to be honest, because I was seeing it, and it was like, huge red neon lights here flashing in front of my eyes. Bottom is in, buy, buy. And ultimately, again, this low was never taken out. Look at the TLT the next day on Thursday. The TBT, excuse me. I keep on saying TLT, but it's the TBT. Look at the TBT right there. Look at that move. And again, we took half off the table right here. All right. Another trade of mine out there, folks. What is it? It was Juniper, JNPR. Look at this bottom. I was buying it right down in this lower range right here. Look at by the end of the week already moving up. And I continue to hold that position. I still think you see a little bit more upside in the coming days in this market. And the reason why I say that, it's going to be choppy. Nothing's going to go straight up, to be honest, because there's still issues in Europe. And Europe was really the main reason. I mean, yeah, growth issues in the U.S. are an issue. But to be honest, jobless claims last week were decent. I mean, you had a couple key economic numbers that were not horrible. I mean, 395,000 on jobless claims is not a horrible number from what the market was expecting. So it's showing you that we're stabilizing here in the U.S., but it's all about Europe. Europe is a mess. Europe is the U.S. in 2008. 2008, when the banks were collapsing here, that's what Europe's going through right now. And again, if they can get their stuff in order, the market actually should have a significant continued move up. It's just a matter of can they get it in order. And they will get it in order in the short term. Ultimately, there'll be more issues down the line for the U.S. and us here in Europe. But the key is in the short run. We're always about swing trading, folks. I don't care what the market does in a month from now. I don't care what it does in 6 months from now, because I'll be on a different side of the market. Right now, short term, I'm playing swing trades. Swing trades are buying or shorting positions for multiple days to a week or so. Week or two. In this market, it's a little shorter because the moves are so ginormous in terms of the bounces and such. But either way, that's the way you're doing it right now, because that's the way the market's conducive. It's a swing trader's market. It's been like that for quite a while now, and it's going to continue to be like that. You have to be looking for short-term gains, and the gains short-term are big. I mean, you're looking for a 10% move in a couple days on Juniper. We're already almost there. I mean, that type of moves are out in this market to be had. You just have to take advantage. You have to read the charts and let the charts tell you. All right, in any case, Juniper, nice move off the lows. Again, it's going to have some choppiness to it, just like the market, but ultimately that should head a little bit higher in the coming weeks. Cisco, I also had us in Cisco last week. Cisco, look at this. All right, now again, I took profits off the table even before earnings because we were up so nicely, but a lot of my members and a lot of my traders held it and made a ton of money last week on Cisco. Why did I like Cisco? You want to know why I picked up Cisco? And again, it's simple. I wish I could claim it was some magical crystal ball that tells me how to make money in this market, but frankly, it's not. It's just simplicity. Take a look at the weekly chart. This is the weekly chart, so each bar is a week. Look at this. All right, what price did I buy Cisco at? Right down here, guys. I bought it $13 and I believe 25 cents or something like that. 25, 45 cents, somewhere in that low 13 level. 16 bucks by the end of the week, folks. 16. But look at this. This is what it all comes down to. You need to look at the charts. Just let the charts tell you. And again, the money is there to be had. It's just, believe it or not, most investors, especially most newbie investors, they're going to follow the talking heads on the TV, which is usually wrong. Because if every person follows the talking heads, then the markets do the opposite thing. Remember, black box institutional trading programs are built to go the opposite way of the small money, to take their money. Because obviously the big money's not making money if they're not taking the small money. So you have to understand that, in general, when the talking heads are talking about something specifically, they're going to be on the wrong side because everyone's going to follow them. In any case, pivot low from 2009. Pivot low 2011. It was a no-brainer that it was going to bounce there because that's technically a major pivot low. You're a buyer there. Look at the money you make on the weekly chart. Here's the daily chart. I mean, look at this move up. All right, and again, my exact entry was right down here. This is my entry, what I gave to the research center, what I gave to the chat room, right there. All right, again, you could have taken it off before earnings up in this range, or you could have waited till after earnings. Either way, it's a profitable trade. That's all that matters. Is again, and this is something that I've stressed to the research center and chat room. I don't care if people are making $100 on a trade because they're trading small money, or if they're making 10 or 100,000 per trade or more on big money. I don't care. The point is you stretch winning trades back to back, and then do another back to back and another back to back, and before you know it, whether you're making 100 or 500 bucks a trade or 100,000 a trade, you're making billions, if not millions, if not hundreds of thousands of dollars. It's consistency. It's all about consistency. Can you be consistent? Because the average person, I'll tell you right now, the average person buys and sells stocks and loses a majority of the time. And when they take their losses, it's 10 times what their winners were. Wrong. That math will never work out. In any case, let's go back to the spiders again, folks. Let's take a look at the intraday chart. Again, here's your pivot low. Look at the markets the rest of the week. It was a beautiful move up. Now, again, futures will open here Sunday night in the not-too-distant future. I'm going to do a no-hype live broadcast. By the way, if you want to take a free trial, take it now because I'm going to do a live no-hype live broadcast, go over the futures tonight, go over trades for this week. I'm going to answer questions from all of you members out there that come in. You can ask me specific questions by typing them in. It's basically an open forum to get educated, get new plays for the week. And again, we do these once or twice a week for our research center members, inclusive of hot charts and alerts are included, which are trade alerts all week long. You have pro trader watch list. You have daily market report with master levels on the S&P, on the currency markets, on the oil market. You name it. There's even more things. Just go to inthemoneystocks.com and you'll see everything that's included there in the research center. And you can also take the free trial of the chat room. And again, as long as you cancel before, there's no charge. So it's very easy. It's a one-click cancel button on your My Account page on our website. It's about as simple as it can be. It's a no-brainer. All right, in any case, enough of that. Let's go back to the charts, guys. One other thing I said late in the week, I said I think gold is going to fall. I think gold is going to fall. And sure enough, take a look, guys. Gold collapsing back down. One thing I said all week long, especially early in the week, the only way markets are going to get a bid is if gold falls. Why? Because when people are scared pulling money from stocks, they're putting it into gold. That means gold's going up. But once people start feeling better about things and maybe not so scared, they're going to start taking profits on the gold trade. And sure enough, when you rallied in the market later in the week, take a look at the down move here. Beautiful down move right there on gold, and that was a beautiful call. In addition, another amazing call out there was on oil. I said, this is where you buy oil. And I said this to the research center in the nightly videos. We had it on in the chat room as a trade, actually, on a buy on a swing trade basis. And I'll show you the chart right now of the USO, which is the ETF for oil. All right, you can see my levels actually down here. Look at this. You can see this is actually live from what I showed the research center and the chat in the nightly video and during the chat room in the intraday chat. What I said was this pivot low right here and this pivot low from 2010, that was your buy range. Anything in here, whether you bought the low end here or even the high end, it doesn't matter. That was your buy area. Take a look at what happened this week. Flushes down. Notice how on this specific day it pierces the upper line. The next day it pierces the lower line and reverses and closes above both trend lines. And this is a technical signal that you have to pay attention to. The technical signal essentially tells you that the reversal here, it never closed below either line. And it was below on 3 consecutive days. 1, 2, 3. The tail shows you where the price traded. So that tells you that if it can't close below on any, this is a major level. Not only that, but you have a bottoming tail here. Bottoming tail is a bullish signal. All right, so you're getting multiple bull signals. Look at the volume again. Same thing with capitulation volume here. This was a buy. And sure enough, many of the traders, many of the research center members took it as well. I got plenty of emails saying, great call on this one. This was your buy down here. Look at the move by the end of the week. All right, USO actually went to my first target. You want to know where my first target was? Right here. You guys want to know why? Because this was gap fill. If I zoom in on this chart, take a look as I zoom in a little bit more. This is where the USO closed. The bottom of the red, that's where it closed on, what day was that? That was Monday. No, that was actually last Friday. A week ago from Friday. So a week ago from Friday, that's where the USO closed. It filled the gap on Friday. So 1 week later, it fills that gap. Gap fill is always a technical level that you should be looking for. All right, when you isolate a target out on a stock, generally it will be to a gap fill or a double top or a double bottom. These are common things we discuss in the research center and in the chat room, and things you can pick up very, very easily. So what it does is it fine-tunes how to maximize your profit. You know, how many of you out there have been in a stock saying, oh, I want it to get to $25. Now, why do you want it to get to 25? Many people don't have an idea. There's no reason. It's just an arbitrary number. They said, well, I want to make 25% on this trade, so I'm going to look for $25 from 20. There's no point in that. You're going to screw yourself, frankly. What you do is you look at the chart. You say to yourself, all right, I know I'm buying it in a level here where there's tons of support. You have a bottoming tail. You have capitulation volume on oil. These are all the right signals telling me it's going to go up. So where do I want to look for my target? Well, obviously, the first eye should be pointed right to gap fill. And sure enough, there it goes. Opens Friday morning at gap fill. By the end of the day, they actually sold off. So if you did that, you basically maximized your profit, got out at the pretty much exact to the penny level that you should have, and by the end of the day, it pulled back, but you're not in the position anymore. See how that works? Really cool stuff, guys, right there. Let's go to a couple other charts here. I want to just note a couple other charts out there. Chevron, this is a very, very cool chart as well. Again, please note how you got a bottoming tail as well. And this is another key signal the market was bottoming. And one thing I want to just point out, folks, is to know a market is bottom, yeah, you want to look at the spiders, which track the S&P 500, so it's like looking at the S&P 500. That's great. You can look at the Dow, you can look at the NASDAQ, the Qs, any of these signals on the major indices. But what you also want to pay attention to are the market-leading stocks that are major components. So, how many times have you heard, well, Exxon and Chevron were up today, so they were leaders in the market, and they are leaders in the market, therefore the market performed decently. Or Apple and, Amazon were down and Google were down today, so the market was weak today. I mean, those are things that you have to pay attention to. So on Tuesday, when the market had that 700-point reversal and put in that bottom that we called, look at how you have a bottoming tail. This is a beautiful bottoming tail. Then on Wednesday, when the Dow dropped 500 points after being up, reversing 700, notice how on Chevron, you actually didn't even go near that bottom. You didn't even go near it. You held up beautifully. That's a bullish signal. And believe it or not, you could have bought right here so easily. Where would your stop have been? It would have been a close right below there. Very tiny stop. You would have known, and ultimately you would have been in for a massive pop. Look at that pop right there. So basically, even if you bought the day after the bottoming tail right here on the retrace, that's $90.50. Guess where Exxon hit on Friday? 97. Means in 2 days, and holding it for 2 days. So you buy Wednesday and you even sell on Friday, you basically make $7, $6.5 to $7 on 2 days in Chevron. Exxon, same thing. I mean, these are just great stuff, guys. And again, I'm going to continue to hold some of my long positions. I've already lightened up on some of them because of such a massive rally, but I still think, again, it's going to be a choppy market. My outlook is this. Choppy market, which means up, down, 300-point days are going to be semi-common in the near future. So you're going to see people getting scared again. You're going to see down 300, maybe not early in the week, or we'll see, obviously, and follow. I think Merkel and Sarkozy are meeting on Tuesday, which is going to be big for the European market, which ultimately would be big for here. But you're going to follow the markets. Overall, I still believe the market's lows are in right now for the near future. For the next couple weeks, I do believe in going into September, you will not see a new lows on the market, okay? And ultimately, pullbacks are probably buying opportunities in the short run on this market. Now, there will be a point in the future into September where I'm going to say, guys, we're going to start going short this market because this market's going to have another flush. But obviously, you have to join the Research Center for that. I'm not going to give it all away in these videos. I've done some amazing educational work here for you guys that are just kind of checking us out. But you have to understand that, all right, folks? This is not a market that you go long or short and just go to bed and sleep for a year or two or go on vacation and not even look. You have to be an active participant in this market because it goes up and down so quickly. If you do that, a good swing trader makes 100% a year. If you get to that status of being known as a great swing trader amongst your friends, colleagues, family, whatever, you're making probably about 100% a year. That's what a lot of our guys do here. That's what I do. I do over 100% on swing trades. It's the way it is, all right? And day trading is just the same. It's even better, actually, percentage-wise. Banging out 15, 20, 25% a month in day trading profits. But in any case, bottom line is, come to us, come to inthemoneystocks.com. Be on the right side of the trade. Again, anyone following the media this week, the analysts on TV, wrong. We were right. And I'll take credit for that. Believe it or not, 2 weeks ago, got caught off guard a little bit on the downside. But you know what? We recovered very quickly. We saw it, and then we saw the bottom and accumulated. And that's what you have to do. You have to know when you're wrong, get out right away very, very quickly, and then maneuver to the opposite side. All right, guys, enough for now. Enjoy the rest of the weekend. Be ready. I'm going to do a No Hype Live tonight. I encourage you to take the free trial at least or join us here at In the Money Stocks so you can participate. I will be going over markets live. You'll be seeing my charts live. You can ask questions live. I'll answer them live. It's going to be a great time. Great time to see this market, great time to trade this market, and great time to profit with the pros. Take care.